So today, Airbnb stock has crashed big time after reporting earnings. So we're going to go through these earnings as a few of you guys have requested. We're going to have a look and see if these earnings deserve this stock to be crashing. And if it doesn't deserve to be crashing, is this a time to be buying Airbnb stock? So hope you enjoyed the video, guys. Let's get stuck into Airbnb. So Airbnb, I'm sure you guys have heard of this one. It's kind of getting that reputation of, oh, let's get an Airbnb. It's getting quite a big size company. And you can see here, it's a 60 billion market cap company. And I think that kind of reflects how big of a company it is right now. But if you don't know what it is, it's an online marketplace for stays. If you want to, stay over in a holiday location, go away for a few days instead of getting a hotel, you can look at Airbnb and go on their marketplace and book a place to stay. And it's had very good success over the last few years. Now, if you look at Airbnb, it's $94 today. It's down 13% and it's currently 51 times earnings. And we'll speak about this in a little bit because it's worth saying that this was an IPO back in the back end of 2020 at $139, and that means it's now 32% down since its IPO. However, it is worth saying that when it did IPO, it IPO'd and rocketed up because actually when it came onto the market, it was debuting at around $68. So yeah, it had a fantastic opening to the stock market. So from that point of view, it had one of the biggest or fantastic IPOs I've ever seen, and since that day it's really been flatlining, or in fact it's down since that period of time. Now when we look at the numbers here, you'll see that the headline on Seeking Alpha is that Airbnb shares fall despite Q3 beat. So if we actually have a look at the Q3 numbers, they were actually really good. If you look at the Airbnb APS, it was a beat by 33 cents. That's no small beat. That profitability is very, very good. You look at the revenue growth, 28% year over year, beat by 30 million, which same again is good. Q3 nights and experience booked up 25%. Gross booking value up 31%. So the booking values, people spending more and more. That's absolutely fantastic. So you can see here, Airbnb walked away with their most profitable quarter ever. So from that headline, you're like, why is the stock dropping? These are so good numbers. The stock shouldn't be dropping at this point of view. Well, one of the big points that really affected it was the Q4 guidance. So if you look here, Airbnb sees Q4 revenue in the range of 1.8 billion to 1.88 billion. Now the consensus was 1.86 billion. So this was a little bit lower when you look at the midpoint, below what the estimates were. And they also said they're seeing a moderation of bookings, or basically them coming out and saying that they're seeing a little bit of a slowdown of the bookings. Now, if you're from a bull's point of view, you'd be looking at that one going, well, there's a lot of impacts in the economy at the moment, so that makes sense. There's a bit of a slowdown at the moment going at this period of time. So you see that in the Airbnb numbers. And you look at the Q3 and you walk away going, look, it was a good Q3. Q4, numbers are still looking good. We can understand why there's a slowdown there. Now, the other point is that you look at Airbnb and you go, okay, these are good numbers, but when you look at the stock, it's trading at a bit of a premium. 51 times earnings isn't really cheap. And if you're going to have a company now that's going to start slowing down, you can't trade at the premium. And that's probably why that share price got hit quite a bit today. And that's what's happening at the moment. We come off a 2020 period where Airbnb had quite easy comps. So if you look at the Q3 of last year, you'll be able to see that the Q3 of last year was up 70% year over year. And you're like, oh, this company's growing at insane rates. But when you look actually compared to the pre-CV levels, it was actually a 36% jump year over year. So you're looking at that one going, okay, realistically, we're seeing a 36% jump year over year. And then you walk into this year and then you go, okay, the company's now doing 28% year over year. So you actually look at that point of view and going, okay, they benefited from the CV situation and now the revenue growth is actually starting to slow down quite a bit. And the problem is with Airbnb, these are great numbers, but if your growth rate is slowing down, you don't command as much of a premium. And that's what people are looking at. They're looking at the Q4 guidance going, okay, there's a little bit of a slowdown now going on here. Does Airbnb, even though it's doing fantastic numbers, even though that profitability is growing at insane rates, does it command that valuation? So I don't think there's a question around Airbnb if this is a quality business. I think we all can agree it's a quality business, and I think we can all agree the company is doing absolutely fantastic things. I think the main thing that people are looking at and Wall Street looked at in these earnings is that growth slowing, and does it or should it command this valuation that it's at right now? So the best way to look at this is run some numbers on Airbnb and see how it's going and should this be at the valuation it is. So I've run some numbers in here. I put no share buybacks down because I don't think they're going to plan on buying some share buybacks at the moment. Maybe someone that's following Airbnb might argue that potentially they could be because they're generating really good amounts of profit right now. But for example, we don't know what that growth is going to be next year. So if I just have a quick look at analyst forecast, if we have a look at what analysts are currently forecasting at the moment, analysts are currently actually expecting 14% growth next year. So you'll see here that they're going to go from 38% down to 14% growth. And once again, that's what I think people are worried at. What is the growth they're going to be doing? What's the valuation going to be in the next few years? And I think people are hoping they come in at the higher end. And if they come at the higher end, I think we'll see a lot more confidence to buy this stock. But at 14% growth, should you be commanding a 51 times earnings business? So yeah, just going back to the point here, no share buybacks. I put in the next 5 years 10% revenue growth, 15% revenue growth and 20% revenue growth. Obviously one at the lower side, one at the higher side, just to be conservative. Profit margins are a little bit up for debate. I've put 16, 18, 20% in. You could argue that potentially in the longer term, they could actually be hitting higher profit margins than this. So just bear that in mind. I also put a multiple of 20 in just because I feel like that is a market average and I think that would be quite a fair multiple potentially for 10% revenue growth, maybe a little bit higher. You could maybe argue it's a little bit higher multiple, so just keep that into consideration once again right there. But looking at what the company is currently trading at, considering the growth they're currently at, potentially the profit margins they're coming in at, potentially the profit they could be achieving, I've got negative 38% return on this stock on the low side, negative 16% return on the stock in the next 5 years on the medium side, and actually 9% growth. So at the moment, what these numbers are suggesting is that the stock would actually probably underperform the S&P 500. Now, the big thing that obviously Airbnb would need to achieve or outperform the S&P 500 is to have first of all, a higher profit margin. So that's something to be keeping an eye on. Second of all, achieve that higher percentage revenue growth, which is also important. And potentially if they achieve a higher revenue percentage growth, also increase that profit margin, can they also then trade at a higher multiple than what the market average is? And that's where the company will have to be successful to really perform on the share price. So overall, my opinion with the drop on Airbnb today is that it's a quality business. I don't think anyone can argue that it's a fantastic business. They're generating good amounts of profit. They've got a good amounts of revenue growth. I think the $1 million question is what the growth is going to be in the longer term. And I think if we're going to come at the lower side of it, unfortunately, I think that means Airbnb commands a bit of a lower valuation and potentially a lower return, and probably is trading at a rich valuation. And that's more than likely why I'm not personally going to buy this at the moment. I think we have to see potentially Airbnb drop closer to them IPO levels for me to be interested in it. The other case is that if you do believe Airbnb can achieve them higher numbers and really expand that profit margin, you're probably weighing this one up and actually thinking it's not too bad of an opportunity. So that's where I'm personally at with Airbnb. I think it's a fantastic company. I just think the valuation's a little bit rich right now, and I'd rather have a bigger risk to reward. At the moment, I think the risk is a little bit higher than the reward, and I'd like that to change the other way around. So that's my thoughts on Airbnb at the moment. Let me know what you think in the comment section, guys. Hopefully you enjoyed a double upload today. Smash that like button, and I'll see you in a bit.